Hello, everyone. Welcome back. Happy New Year. And let's see what Bitcoin has been up to lately. Today, we're going to take a look at the price action. We are also going to be analyzing where our next trade lies. And we're going to be planning for, let's see what day it is. Okay, so I believe today's a Thursday. So we're going to be planning for the week ahead. Now, we've had a decent trade setup that's actually come to fruition, which is good. So we're going to be taking a look at that in a bit more depth. And seeing what's on the cards for the next play. Big shout out to everyone who's followed recently. Shout out to everyone who has joined Discord recently. To join Discord quickly, scroll down to the signature of each post, and the links are in the bio or the signature at the bottom. So yeah, big shout out to you guys, all 55 of you guys. Obviously, we've also got YouTube there, which you can connect on YouTube. But if you do want to have a one-to-one discussion with myself, the best place to find me is on Discord. Okay. All right. So now, as for Bitcoin, we were eyeing up some very, very key areas, which we're going to take a look at now. So prior to New Year, we said the next play, or my next play, or our next play, is going to be the following. So we said we're coming down, we're accumulating in this range. We could get a deviation at the top or the bottom of our range. But in the case that we do not, we said this 10-minute zone is looking very juicy, a very nice place to get that continuation play for that higher low, because we've had a low on the way down, we've flipped structure, we've retraced, we've broken structure, we look to retrace for another potential breaking structure. And if that is going to take place, if that is the way to play the markets right now, it's going to come from this 10-minute zone, this 5-minute zone, or this zone underneath. All right. Of course, we could also SFP this level, but we didn't actually have to wait that long. We didn't get deviation from this range, granted, but we did get a nice move from this 10-minute zone. So I'm just going to play that. Bang. Look at that. That was really nice. Very nice play. And actually, you actually could argue that we kind of got 2 in 1 there. We kind of deviated this range and dipped into that 10-minute demand zone at the same time. That's what it looks like. Very, very powerful move up. Very nice move up. And the risk to reward on that looks really healthy. So we're going to analyze that in a second and see exactly how we would have been able to get into that trade. And if you do want to trade this way, you want to get more trades like this, feel free to hit me up on Discord. We've got one-to-one lessons. And we've got channels where you can get direct setups and signals in a sense, but not quite traditional signals. Okay, so how did that happen? How did that happen? Well, let's time travel. Let's go back in time and let's see. Perhaps we drop to the 10 minutes. So on the 10-minute, we were looking at the charts and saying, hey, we've got this accumulation. Oh, looks like we did deviate it. Looks like we did deviate. Let me just double check. It looks like we did deviate. Very nice. So we actually got 2 trades that we could have entered. We got a deviation from the top as well as this deviation from the bottom as well. I didn't see that. Yeah, we deviated the top as we can see here, and we deviated the bottom here. So two for two. Very nice. 2 simple trade, especially that one. Nice risk reward on that one as well. Could have easily entered those. So let's take a look at them in a bit more depth. So we know what's going on. So we're going to time travel. Let's go back to around 10:50 on Tuesday. So at about 10:50 on Tuesday, this is what we can see. Nothing more, nothing less. These are the levels. What we're going to do is we're going to extend this slightly further up. Okay. Because price played around for a while, and these are the levels. So let's go. So price is in the middle of the range. It came down, but it went back up all the way up there. Now, as we tag that level, the question is, did we get confirmation to allow some sort of market structure entry? And yes, okay, if we didn't get a market structure entry, did we at least, at the very least, get a market cipher confirmation on that one? So from what I can see here, we haven't quite, got a market structure entry right now on the 5 minute, and that's because your 5 minute structure here looks like it's straight up. Well, you not necessarily straight up, but you've got higher high, higher low, and higher high. Okay, so to justify this trade, what do we need? What do we need to see? Well, to justify this trade, we need to see this level lost, don't we? We need to see that level lost, but we didn't quite get that. I can't see that yet, so we can't really justify the trade as of yet. But if we did go to the 3 minute, did we get a confirmation on the 3 minute? So the 3 minute high low is kind of in the same position as the 5 minute high low. Maybe the 2 minute would have given us something. Well, the 2 minute did give us something. The 2 minute gave us a structure that looks like this. Our 2 minute structure looks like this. So we've got high high, perhaps a high low, a high high, high low. We actually have another high high and high low there before we have that straight move up. So on a 2 minute, we kind of would have entered the trade if we closed below this level. Okay, and I'm going to tell you in a minute why maybe this wasn't the best trade to get into. And this wasn't the best trade as far as risk to reward. So this is what happened. We can quickly take a look at the 1 minute. Let's do that. So the 1 minute, very similar to the 2 minutes. So the 1 minute, you get your confirmation maybe here, instead of down there. Well, I'll slap it on there anyway. Why not? Okay. So that's what we're looking for. So to enter this trade, we want to see us lose this level. I wouldn't usually recommend, especially if you're a beginner trader, try and stay away from trading on the 1 minute, just because on the 1 minute you're going to get lots of false plays. You're going to get lots of bullish and bearish change in structures that don't really give you a directional bias. And what I mean by that is, look here. See here we have already on a 1 minute a bullish flipping structure. Okay, and not long after. Okay, if we pause that for a sec. So here we have a bullish flipping structure. It doesn't really give us a continuation. Then it reverses on us and it gives us a bearish flipping structure straight away. Doesn't really give us any continuation. And then it looks like here we have a bullish flipping structure again. And then potentially another. So as you can see, the 1 minute, the 1 minute structure is up and down. It's kind of up and down. But anyway, so for the beginners, we're going to get rid of this. We're not going to teach you, stuff that's going to make you blow your account or lose money. We're going to teach you the stuff that's going to be, best serve you, especially at this stage of your trading. All right, so here we have a flipping structure. That flip looks like this. Okay, so we're the expectation of order flow, or the expected flow of order, is a retracement for a further continuation right now as we speak. Okay, so that retracement, let's say it happened up there. This is on a 1 minute. I'm going to move to the 3 minute so it plays a little bit quicker. So let's say you did enter on that retracement. So you entered a short. Okay, so the retracement was nice, to be honest. The reason I said earlier that, even though this was a trade that was given well in advance, and you could have just, if you simply set a limit order there, you would have netted at least, what does it look like? You would have netted a 7x. If you just, based on my setup and based on what I gave out, if you just entered a limit order there, yeah, you would have been fine. All right, but I wouldn't recommend doing that, because setting limit orders, I know you hate to hear this, especially if you in a habit of just setting limit orders and leaving it. It's kind of, you're trading blindly, essentially. So I wouldn't steer you the wrong way, and I wouldn't recommend you do that. All right. So the reason I said it's not a good trade to enter over here, and some of you may disagree, and that's fine. The reason I said it's not a good trade to enter over here, but it's a decent trade to enter from up here. Okay. What do you think that reason is? So for those of you who have been here for a very long time, you know exactly what I'm going to say next. So we've got trader A, we've got trader B. Why? When price action was here, I wasn't too keen on it, but now I'm a bit more keen on it. The reason is it's simply due to the risk to reward, all right, or the expectancy. Your risk to reward here is 1, okay? And if you actually look at the target of this trade, which is simply just a range low, it's less than 1. It's 0.72. Let's say it actually came down here, because it did. Now, the risk to reward on this is 1.8. Okay, so the expectancy is 1.8. That means if you risk £1, you're expected to make 1.8 or £1 80 cents. Not £1 80 cents, £1 80 pence or $1 80 cents. Okay, so it's better. But is this the best risk to reward? Not necessarily. I wouldn't recommend taking a trade lower than 2 risk to reward. So if this had come a bit higher up, maybe to about there, and we got that retracement there. So if this came up here and then it dropped, that would have been ideal. So that I would have been able to say, yes, I'm getting into that trade. And that would have been really nice actually, because we would have had a reaction off of supply here into that zone. That would have been beautiful. But that's not what we got. Okay. But if you did enter that trade, you made money on it. So can you really complain? Not necessarily. Just make sure you took your profit out when you were supposed to take your profit out. Okay. So that was that trade. That's how we would have entered that trade. Now, the next thing you would have been looking out for is, did we get a deviation at this range low? So if you played a price action at the range low, how are you going to be able to tell if you can take a trade at the range low? How are you going to be able to do that? I'm going to give you a moment to think about that. So for those of you who watch this religiously, I'm sure you already know what I'm about to say next. Also, for those of you that I teach and I coach, I'm sure you know what I'm about to say next. And the answer is, we need to wait for flipping market structure. Not a flipping market structure, but a flip in market structure. Okay, so what is the market structure on the way down? Well, on the 3 minute at least, we've got lower low, low high, lower low, low high. We have a low low here, low high here, and a low low. So that means, can we justify a trade unless we reclaim this level? No, we cannot. Should we? No, we should not. Okay, so let's see. Did we get a flip? Mind you, this is also a zone. No, not a flip, sorry. Did we get a flip to justify a long? No, we didn't. If we get a flip, can we take... Okay, let me rephrase that. Did we get a flip to justify long from this range low? No, we did not. We broke through the range, came through the range. Now, did we get a flip off of this supply zone to justify long? Well, we're going to find out. And the reason you can treat this range as one, or this whole region as one, is because this potentially was simply a manipulation of, our manipulation of our shorts. Okay, so we'll take a look at that now. So as price came, and then so we're playing here for now. We haven't got a flip yet. You've kind of come back up to this decisional lower high, and you haven't quite had a flip yet. Okay, so we can't really justify a trade yet. We may be able to do it on a different time frame. Let me check the 5 minutes. Unlikely on a 5 minute. Maybe on a 1 minute. Okay, so on a 2 minute, you probably would have already been in your trade. Why? Because on a 2 minute, you got a flip here. Okay, so on a 2 minute, you would have been in that trade already. Like I said, on a 1 minute, we're going to stay away from the 1 minute. All right, but so on a 2 minute, maybe you'd have entered already. Now let's go back to the 5 minute, and let's see if we play that along. All right, bang. Now we get that decisive break in structure that we love to see. So now this is where you say to yourself, I'm in for a long. I want to enter a long, and I can chase this long all the way up there. I can chase this long all the way up there. But the first test of this long is going to say, can I break out of this range? Why? Because of inertia, if we're in a range, we're going to long the bottoms, short the top. So as we get up here, we need to be thinking, oof, we need to see what price action is going to do at this range high. Okay. So this is where you might want to say, I'm going to set a limit order. I'm going to enter my long here off of this close, stop loss at the prior low. Or you might want to say, I want a deeper retracement. Or if you entered on a 2 minute, the person one who entered on a 2 minute, he already longed it from down here because he treated this as your break and this is your retracement. So he's already in that long, okay, and he's happy. He's like, ha, got in early, got in before you guys. All right, we're gonna get rid of this for now so we can see things clearly. He's like, ha, I got in before you guys. I'm winning. I'm already in profits. I'm gonna move my stop loss to entry very soon, very very soon. All right, so what happens next? Then we get another continuation pattern on the way up. All right, this is where trader number 2 should already have his stop loss here. It should have already de-risked that trade. Why? because in order to come and take out, if we start breaking, closing below this level, yeah, if we start closing below this level, that means we're coming back down. And that means, why are you still in that trade? Because you would have flipped market structure on a 5 minute bearishly. So this is where trader number two already de-risked it. But I am going to just extend this back down, because we're going to do a risk to reward comparison in a second, to see who won that game. Okay, so now RSD, then we get a few continuations up. Now this is where you also want to say to yourself, okay, well, we've come back up to this range high. Okay, come back up to this range high. Can we plan for a short there? We're already in our long. All right, we're watching price go up. We're happy. We're seeing profits on MetaTrader 4. If you're using MEXC, you're seeing profits on MEXC. If you're using Bybit, you're seeing profits on Bybit. It's good. It's looking good. You're thinking, yeah, this is a new year present. We're starting the year with a nice little profitable trade. Okay, so this is where you carry on a 5 minute. Now you might be a bit worried here. Why? The reason you might have been worried there is because on the 5 minute, you did get a momentary SFP of this high, although the SFP did not break structure. So what I mean by that is, if you trace it from the high to the low, so we've got higher, high, higher, low. We're going to skip all of this. We get higher, high, higher, low, higher, high. But this SFP, it did break structure internally here, but it didn't manage to close below this level, which means this is simply a higher low for another higher high. Okay, so this is what it looks like on the way down. We still haven't had a justification of a short yet, even though I think we could have had a little scalp here, okay, but an internal scalp, not a major scalp. Okay, so this is what the price action looks like on the way up. We're creating high highs and high lows. All right, so far we're doing good. We're doing very good. We're still in that trade. We've got another high low. We've got another high high. Okay, on the 5 minute, I guess we have a flipping structure here on the 5 minute. Okay, because we have a high low, and then we get a flip here. Now this is where you may want to say, I'm going to close this trade because of that flip that you've just seen. You may want to say, it's time to take my profits and I'm going to close that trade. Okay, or you may want to jump to the 10 minute and say, well, this wasn't a structure point on the 10 minute, even though it is on the 5 minute. I'm going to go with a 10 minute entry, maybe because that was a 10 minute supply demand zone, and that's how you're going to roll. And if that's the case, you create another high. Okay, so we're almost at the trade target, which we said was up there. But at the point at this time, you've already been in a nice, juicy trade here. You've got a 3.7 risk to reward if you entered off of that close. But if you're trader number one that entered really early, oof, look at that, man. You've got 8.3 risk to reward. So that is pretty nice. That is eight. Let's say you were doing a challenge account. I know you've got all these challenge accounts that are available these days, but let's say you were doing a challenge account and you needed to make 10% to pass your first stage. That's 80% of your challenge account done on one trade. On simply one trade. Let's see, did we get to 100%? Let's see. But yeah, you do. 10x. That was a 10x trade at least. All right, let's see if trader 2 gets there. He's still on 4x. Okay, that's fine. I'm going to move this here so it's clear. Okay, trader 2 is still on 4x. Okay, but trader 1 has passed his challenge account on one trade. All right, he's happy days. All right, okay, but here you would need to be saying, all right, well, we've got this 15-minute supply zone above us. All right, we did purge through it. We didn't really get a reaction from it, as we can see here. So should we really be thinking about shorts? Not necessarily. Now, Bitcoin did do something cheeky. This is what it did that was a little bit cheeky. Now, if we look at this region and we zoom in, the reason this was cheeky is because as soon as we purge this zone, this supply zone that we had up here, our 5 minute structure looks like this now. High, low, high, 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 low, high, high, and then what looks like a break in structure. Okay, and that break, especially if you're a beginner trader, seems as though it took place here. Okay, seems as though it took place here. All right. Now I wonder if on a higher time frame, this is still a break in structure. So I'm going to jump to the 15 minute and see. Okay, so on the 15 minute, it's no longer a break. All right. So this is one of the biggest lessons to learn as a new trader, that, sometimes you may see an entry on one time frame, you flip to another time frame, and that entry is very quickly invalidated. And we've seen that here. Why? Because on a 15-minute, your structure is simply straight up, straight down, straight up. So this is what your 15-minute structure looks like. We're going to put that in blue, perhaps. So just be careful with these things. And this is what, this is what I'm here for, just to show you that, hey, this does happen. Okay. And hopefully, as you get more experienced, you can prepare for it and plan accordingly. All right. So now, because that wasn't a break, all right, this is where you could say to yourself, actually, it's not a break, so I want to enter on a continuation and take this all the way up. Okay, but this is a good trade. This is a good trade. This wasn't a good trade. This was a great trade. 13x on if you're trader one, and 6x if you're trader two. Not bad. Not bad at all. Now there was another zone in here if you were looking on the lower time frames to enter a trade. There was another zone in here for a continuation play here, and I was actually planning to enter this one on stream, but we haven't necessarily. I mean, it's a good trade. It's a great trade. Maybe we would have entered there. I would have been maybe 3x up by now. Okay, but it's fine. I'm already in a long. I'm in a long from down here. I'm in a long from here. Although I risk 0.5% on that long. Wait a minute. Bang, bang, bang. No, I think I'm in a long from here, this region here. Yeah. Okay, anyways, so that's what we've got so far. So the question is, where is the next trade coming from? If you did take that trade, big congratulations. Make sure you leave your profits. Make sure you update Trade Journal, put your profit on the profit wall, so we can see how much you're making. I don't really care about how much you're making, but let's just see the percentages. Let's see your risk to reward. Let's see that's all going well. Now, another quick tip. Let's say you did treat this as a range. If you treated this as a range and you saw that you clearly broke out from your range, bang, no reason why you couldn't have entered that continuation leg there and taken that up. Okay, there is no reason why you could not have entered that trade. And you could argue that that trade would have made you more than any of those other trades. And let's take a look. And let's see what Market Cipher did actually. Okay, Market Cipher didn't give you a confirmation there. It did give you a confirmation, did it? Okay, not necessarily. Did not give you a confirmation there either. It did give you a confirmation on this tiny little short scalp. However, let's see. Now, this is what I do want to tell you guys. Now, just because you've missed the initial move, it doesn't mean you can't get involved in the trade. All right. In my opinion, you could have easily looked to enter the trade as soon as you got this break out of your range. You could have definitely looked to enter this trade here. You could have looked to enter this trade after you broke structure again here. Okay. You might have been hesitant here because you're in premium, sorry, of your range. But again, as soon as you broke out of the range, you could have looked to enter here and definitely looked to enter here as well. Okay. So again, this is where we call it chasing the chain. We've got a nice little uptrend and we're chasing the uptrend, chasing it here, chasing it here, chasing it here. Remember, the trend is your friend until it's not anymore. All right, so that's kind of how we would have played that. So what I'm going to do now is quickly talk about where the next trade may well come from, and discuss what I'm looking at next. We're going to get rid of all of this because it's done. It's done. We don't have to think about this. Don't have to dwell in the past. It's done. It's finished. Done. All right, this is what we've got right now. This is how we're playing it. I'm going to get rid of that as well. Get rid of this. All right, this is how we're playing it. Also lost that zone, so it's gone. Okay, so here we have it. Now, if we look at our structure is this. Okay, on the way down, we have lower low, lower high, lower low, lower high, lower low, lower high, lower low, breaking structure, retracement, continuation. So the expectation at order flow, all right, is, I believe, a retracement for another continuation. We're heading to this high, guys. At the moment, we are heading to this high. What's going to be in the way of that high? Well, the first thing is this level here, which is why we're getting some resistance here. It's this liquidity pool here. Okay. The next thing that's going to be in our way it's going to be this guy here. Okay, so that's why we're going to be looking to short that guy over there if we do get up there. Okay, anything else? Well, other than that, I think we're at the range high. Other than that, we're at the range high. But is there a chance that we get one more deep retracement here before we continue up? 100,000 billion, trillion, million, gazillion percent. Okay, so that's what I'm going to plan for. I'm going to plan for one more continuation leg until we get up. So I've got that short there. I've got the short at the range high, the external range high, treating this as the range. For those of you who watched last lesson session video stream, you know what I'm talking about. So we're looking to obviously short at the actual extreme and the supply zone before the extreme. The supply zone is a key zone because it's confluent with that POC and it's also from this old range that we had. Okay, so we're going to look to do that. And remember, what's basically happened is we've SFP'd at the top, we've SFP'd at the bottom. What do I mean? So at the top, we created a high, we created a low, we came up, we SFP'd that level. We came down, we SFP'd this level, and now we look to be going back up. Will we get all the way to the top? Only time will tell. Now, like I said, I'm looking to enter that continuation play just up to that zone. Let's see if we can get a nice trade there. So I'm going to go on my 1 hour time frame and just get my structure right. Okay, so on the 1 hour, my structure kind of looks like this. On the 1 hour, so I'm going to make this a bit thicker. Give it 3, make it blue as well. On the 1 hour, my structure looks like this. Bang, 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 bang. Do 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 bang, 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 retracement, bang, 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 bang. This is my 1 hour structure. That means we could get a retracement, a bang bang, anywhere here. So let's see, where could that bang bang happen? Well, first of all, I want to see where this ends. But before I see where it ends, I want to see if I have any zones there. Immediately, I can see the first thing that comes to mind is this zone here. Now, I'm a bit cautious of the time because I do not want this to reach 30 minutes. Because if it does, TradingView doesn't like that. TradingView might not post it. And it's going to be such a pain to record this all over again. So that's a zone there. Let's see if we have anything underneath. Okay, we have another zone here. We have another zone there. All right, so these are two potential zones we can look to get a reaction from. Two potential demand zones we can look to get a reaction from. Let's see, do we have anything else? This almost had a zone there. But there's nothing clear, nothing really clear I can see. We're checking to see do we have any other zones, and not on a 12-minute. Looks like we do have a zone here. It is a 12-minute zone, but it's still a zone, so I'm going to draw it in. Okay. I think I might stop on a 5-minute here because then the structure gets really wishy-washy. We do have what looks like overlapping zones here. Okay, so I'm going to sketch that in there. And I think we can stop there. I think we're going to get a bounce. If we do get a retracement, we'll get a bounce from one of those zones. Okay. And that's where I'm going to look for my continuation long. And that continuation long, where am I going to take it up to? Well, I'm going to take it up to the prior high that created that retracement. So that means my long could either happen here. Alternatively, it could happen down here. Alternatively, it could happen down here. Okay. Oops. So these are my long plays. Okay. Apparently, there's a new Squid Game out. Squid Game 2. And I'm going to go check that out after this, actually. So I'm looking forward to that. All right. So this is where I'm looking for my longs. You get the idea. How am I going to look to enter? I'm going to wait to see our market structure flip as we come into that zone. And then as we do, I'm going to be in that one. Okay. I'm going to look for a short at this zone and look for a short up there. And that's pretty much it. So hopefully you found this useful. Don't forget to hit follow, join on Discord, and I will see you next time.